So first, I want to welcome everybody for coming to this event. I am really I really enjoy sharing information, and when I hear a lot of questions, I think that is something that needs to be answered. So the big question is, what is gap funding? And I was talking to some other people that I know that are experts in the field, and that's Harold McGee and Leo Clark. And they said that they would absolutely love to be on a panel to talk about what is gap funding.
One of my favorite topics.
Yeah, creative real estate. And real estate is creative. So I am really delighted. First, I'm just going to give you an introduction. Leo Clark is a builder in San Diego, and he does new builds. San Diego was probably one of the areas that turned around the quickest from the downturn of the real estate market. And, one of the things about being in real estate is you always have to have a pulse on the market. You always have to listen to what's going on around you, and you have to be able to adapt to the strategies that work for your area. And yep. So, Leo, so tell me just a little bit about yourself and what you've been doing. And
well, Jean, you and I have been around each other for 7 years now. So as we look at what we do as well as what we want to project out and adjust to, back in 2012, heard a presentation from a very prominent speaker throughout our state, Bruce Norris.
Oh, yeah.
And then once I understood what he was showing us through the numbers and the projection of where we were headed as a state, I went from rehabbing to building new homes. At that time, we had about 7 rehabs going, and I basically shifted my strategy on real estate investing. So I started building from the ground up. My first purchase was October of 2012, and I shifted my whole business model, and I haven't looked back. So right now I've got 4 projects which consist of 13 homes. So somewhere in the pipeline, there are developments of homes throughout San Diego County. So basically I'm in the process of building 13 homes.
Wow. That's, you should be admired for being able to make that shift.
Well, one of the things that really, and this is in every market too, throughout the country, you really got to assess where you're going to be a year from now, 3 years, and 5 years from now. I knew back then that rehabbing was going to go, it was literally the margins were going to collapse. And from that standpoint, what do you do with your business? Well, if rehabbing is not the answer, then you got to look at value add in a lot of markets. And this market here in San Diego, the value add is building new homes or adding square footage, one of the two.
Absolutely. Well, welcome. I'm glad you're here.
Thanks.
And Harold, you are my local investor savvy agent, but you are so much more than that. Give me a little background information on you.
Well, as many of you know, that I'm a local real estate broker here in Austin. Jean and I have worked a little bit together on our deals over the last couple of years, and we run the Real Estate Investor Masterminds networking lunch on Thursdays, and we've been doing that successfully for we're going on 6 years, I guess, somewhere in that area, 2011. Yeah, absolutely. And I've built and sold a property management company, and I've recently kind of started working into the financial services side of the business, working with real estate investors to build up their portfolios and then in turn protect those portfolios. And then I have also done some gap lending myself, working with a couple investors on a couple projects, and got one in the works right now as we speak.
Well, great. Well, I'm glad you were able to make it too, Harold. One of the things that we have in common here is that we've all been involved with gap funding for our projects in one way or another. And I've never done gap lending myself, but I am now thinking about getting involved in that. And I know Harold has done, both received gap funding and done gap lending. And I know, Leo, you've received gap funding.
9 right now.
Awesome. Okay, well, let's get started. Let's get going. Now, just some housekeeping on if you're watching on Facebook Live, you probably can't see the actual presentation, but you can either connect to the Expertise TV. If you're on Expertise TV link that I had sent out earlier, then you have the choice of what you want to see and which window is in focus. You can have the presentation in focus, or you can just look at me or Harold or Leo, and just by clicking on the image. We also have a place where you can ask questions over on the side to the right. This is if you're on the Expertise platform. You can ask the questions there, or you can just chat. So please go ahead and ask your questions. Don't be shy. So, a lot of people are saying, what is gap funding and how do I utilize it? And, I think it's a really important topic for people who have real estate businesses, who are developers, and for those that want to lend, because there's a lot involved. And where the return, as a lender, where the returns are high, you need to protect yourself pretty well. So we're going to talk about, the definitions of gap funding, the opportunities and the risks involved for the real estate developers, and the opportunities and risks for private lenders. So the gap funding definition: it's a loan usually secured in a secondary position that covers the cost not covered by the first position lender. Now, that first position lender could be a hard money lender. It could be a subject to transaction. It could be a conventional loan. That first position lender is there and it exists. So these extra costs involved may include a closing cost, interest payments, maybe if it is a subject to deal, bringing up the previous borrower's arrears, utility payments, and more. Okay, now we've already introduced ourselves, but just for those that have come in a little late, this is the panel. We've got Leo Clark and Harold McGee and myself. Just a little bit about ourselves. Don't hesitate when you ask a question. Don't hesitate to direct it to either Harold, myself, or Leo. So first, we're going to talk about the opportunities and the risks for real estate developers. And I invite my panel to interrupt me at any time if there's something that I'm missing or if you want to add to it.
Well, Jean, you mentioned the word subject to earlier,
Yes.
and
Yes.
I want to assume that someone may know or not know what subject to is.
I will talk about that. Most of my audience are rehabbers like I am. But there's a very common strategy used in heavily in Austin, and I'm sure throughout the country. It's basically buying a property subject to keeping the existing mortgage in place. Now, this is sometimes controversial because there's a lot of benefits in it, because you're probably, that first position lien is most likely a low interest mortgage. What makes it controversial is that the question of the due on sale clause comes into play. So, but conceivably, you could find somebody that may be behind on their mortgage, facing foreclosure, and me as a real estate investor might come up to them and say, I can help you get out of foreclosure. I'll buy your house from you. I will bring you up to arrears. I will promise to make your payments, and you just sign the deed over to me. And therefore, I might have a minimum investment into a property that is supported by a low interest rate loan. That is more appealing to me as a real estate investor, because my other choice is to get a hard money loan. Did I do that right,
Yes.
Harold?
Yes. Yep. That's perfect.
Okay. So, I mean, there are classes on that alone, and it gets really involved. And I've been a part of many discussion and heard some successes. And I've heard of other issues. There's, you definitely, if you do that kind of a transaction, you definitely want to work with an expert. And I encourage you to get an attorney to help you close that deal.
No doubt, because one of the biggest factors in California is that you're coming in saying, I'm going to buy it at this price today. And with our appreciating market the way it's been, there are very savvy homeowners out there and savvy sellers. If you don't nail down that purchase price, and a year from now, when you want to do on sale clause, they look at, well, what's it valued at today? So you got to nail down that purchase price and have a lawyer and have the right contracts drawn up in order to say, I'm buying the house at that price.
Absolutely. So, again, this could be a whole nother webinar, a whole nother discussion, but it's just something that we wanted to clarify. So if you're a real estate developer, you've got your own real estate business and you want to buy a house and you want to renovate it or whatever you want to do with it, whatever your exit strategy is, using gap funding is critical if you want to leverage your business, if you want to get it to scale. It's also very convenient because you don't have to use any of your own cash, or at least minimize your cash investment. And I've done that many a times where I do deals and I've not used any of my own cash. I hate that the gurus say you can do this without any of your own money, but it's not as simple as they say, but I've done it. So you can, I guess.
It is. I'm doing it.
There you go. So the cons of it all.
Same here. Same here. But, honestly, it takes a while. And it's a certain amount it's a trust factor as well that you build with your gap lenders. So it's pretty much just this time and patience in to do it.
Absolutely. The other side, the cons for the real estate developers, is you've got multiple lenders that you have to manage. Now, these are people that have invested in you, and they want to know what's going on. And, every investor is different. Some of them want weekly calls. Some of them just want to know if they're going to get their profit out by the end of the year. But that is just one of the cons. Gap lenders expect a good rate of return. So they are taking some of your profits. But I'm going to go ahead here soon and help you understand how it's okay that they take some of your profits. You want them to take some of your profits. And then you've got a liability to your lender. If the deal goes south, you're the one that they're going to be looking at. So you have to you got to be thick-skinned on stuff like this. Oh, shoot. Hold on. I pushed the wrong button. Now, if you're a private lender or want to be a private lender, or you happen to have some money in your IRA that's not performing like you would like, you might want to consider gap lending as a way to get higher than normal returns. The benefits is that you are investing in real estate, and that real estate is secured. Unlike investing in a trip to Las Vegas or investing in the stock market, etc. You've got generally a higher return rate, and we'll talk about that in a minute. And you also get a quick turnaround on your money. It's not lost for 5 years, or it's not in a 5-year CD. The cons are you are in a second position. So even though it is secured, it's not first position. And this means, just briefly, that if the house goes into foreclosure for whatever reason, and it goes to a public sale, the first lender will be the first one to be paid. You, in second position, will be the second one to be paid if there's any money left. So understand that risk. There's also a chance that you could lose your entire investment and you may have to foreclose. So, again, high returns, understand the risks. Okay, so some terms that everybody needs to know. You need to understand what a profit is. You want to understand what your net yield is. A cash on cash return is a pretty important concept in the real estate investing market, and you need to understand how your return equates to an annualized yield. Okay, so I used as an example a property that I've got that I'm working on right now in Mobile, Alabama. I bought it. So we're just gonna analyze this deal from a real estate developer's point of view on what it would take. Okay, this is just high level. We're going to get deep down into the deal, but in order to do this project correctly, I would need to come up with $65,100, assuming the project takes 6 months from when I buy it to when it's sold and in the hands of somebody else. I would have the opportunity of making a $17,000 profit based on a total investment of $65,100. If I utilize hard money, I would still need to come up with some funds, the $19,100. If I happen to be sitting on $65,000, I could do 3 of those projects at a time. Even though I would get less profit, you can see that I would, by doing less profit per deal, I could safely be making 3 times the income. And the third example is if I have zero money, zero of my own money, I could do probably 8 projects at a time. And I'm just me. I'm not talking about, me and my partner and my secretary and my acquisitions manager. I'm just me. Let's just say 8 at a time. And I say 8 because I've done 12 at a time, and that's too many for me. So I won't do that again. So I could conceivably make, if I had 8 of those deals at a time, $12,000 a month, which is not bad. So you can see how this will scale your business. So here is the spreadsheet for my mobile property that I bought for $32,500 and putting $30,000 into it. And the estimated final sales price is $110,000. Again, if anybody's got any questions, if you type them in the question section, I'm happy to answer them and address them. So here, this shows exactly where and why I need $65,100. And in this spreadsheet, it shows that I've got a projected profit of $17,000. And this is a net yield of almost 27% in 6 months. So annualize that. So you would double that 27%, it'd be 54%. So that's still a pretty good return. Now, here's the same spreadsheet, the same deal. If I used a hard money lender, I still need $19,100. My updated profit went from 17 to 13, but my cash on cash return soared to 70%, and that's in 6 months. So that alone is a tremendous case for using hard money lenders. Mm-hmm. If I'm going too fast, let me know, and guys, stop me if there's something that is not clear here. Here's an example of I'm using 0 of my own money. I'm getting a hard money lender, and I'm getting a gap funder. Now, gap lenders, what I've experienced in the past with my gap lenders is they want a 20% return in 6 months. That is extremely negotiable. But
yeah, that's pretty high for me.
It depends on your position. It depends on your track record, your reputation. Mm-hmm. I've seen people that want a 35% return in 6 months. I've got somebody that's, has, is offering 18% return. But I'm just using for this example a 20% return. Leo, I mean, I'm sure with your track record, you can prove to people, that you're probably a safer risk for gap lending than, somebody that's new.
Right. No doubt.
So here again, if I happen to have the money for that one deal, I could do that one deal and spread my profit over 6 months, earn $2,900 a month. But you can see how if I leverage other people's money, I can actually earn up to $12,000 a month. So are there any questions or concerns? I mean, I hope everybody can understand why using gap funding is a good idea. Okay, now with the gap lender, again, the return is always negotiable. The lender is going to be in a second position, so they are taking a high risk. And if you are the developer, you need to understand their position. If you are the lender, you need to understand what your value is to the developer you're talking to. Now, some people might ask, well, wait a minute, doesn't this get into the usury laws? Isn't that too much? And just with any business deal, you can negotiate, you can structure the deal to be a joint venture, profit split, and it doesn't have to show interest. Is that clear?
Can I add something here for you on this?
Oh, please do.
The promissory note with personal guarantee. I don't know in other states, but in California, the promissory note needs to be done by a broker, licensed broker. And the reason behind it is due to you're selling a security. When real estate is tied to it and you're going forward and you're putting a promissory note with a specific dollar amount and a specific interest, you're selling a security. So it's supposed, and most don't, and most people just do their own promissory notes out there and everything's great until something goes sideways. But it's supposed to be done by a broker.
Harold, is that true in Texas?
I'm not familiar with that, to be honest with you.
Yeah, in fact, it became an issue. I can't remember how far back, but they even have it in the guidelines of all realtors and brokers when they do your annual updates. You get your list of all the new updates to the industry. Mm-hmm. That was actually put in an update several years ago, and so now it's inside the actual guidelines of how to go forward with any kind of document in real estate.
Well, that's something to watch out for.
Yeah, absolutely.
Thank you for bringing that up.
Make an inquiry.
Yeah, each state is different. It's critical, if you're the lender, to make sure that you or a trusted source files the second lien.
Yes.
I don't know how many people have lost thousands of dollars just because they didn't file the lien. And don't trust your borrower to do it. I mean, if you've got an honorable borrower, then maybe, but just in general, you want a third party or a trust, or you yourself file the lien. Okay, again, if there's any questions, please don't hesitate to post your questions. So here again, this is the spreadsheet again, assuming that you are using a hard money lender and a gap funder, or it could be a subject to, or with a gap funder, and assuming a 20% return, you can make a rather small investment, especially if it's from your IRA. Say at this point it's $19,100, and you get a $3,800 return, hopefully within 6 months, sometimes sooner. Now, Leo, you mentioned that 20% is high for you. What returns are you used to?
Anywhere from 10 to 12 annualized. So I'm right now, the majority of mine are 1% a month.
Okay. And Harold, what's been your experience?
I have done a percentage of the net profit. So I haven't done any kind of, well, I have done 7% annualized of the money that has been put up by the gap lender plus a 30% of the net.
Yeah, so an equity partner position.
Right.
The gap funder, the gap lender has got the power to negotiate anything that works for both of you, both of you. When you look at somebody, I'm sorry?
When you do that equity position, Harold, are you the profits before the first position? If he has an equity partner there, are you capturing your profits before any disbursements are made in the profit area to the primary lender, or is it after?
After the primary first lender has been paid off.
Okay.
Yeah.
And you, Leo?
I don't do
Oh, you don't do equity splits. Okay.
no, I do equity splits only on the primary, not on seconds.
Okay. And again, if there's any questions, go ahead and post them. Okay, so when you're a gap lender, don't forget about the power of compounding. I mean, here's an example. If you had 60,000 investable funds, you can do, given this one example, 3 at a time and get an $11,000 return within 6 months, maybe even sooner. I mean, I think, Harold, you've got a deal going right now where you're in a gap position that you may get your return within, a month and a half.
I actually closed that out. I got it in 25 days. But that was it was a joint venture as well, and so I was the money. There was no loan, and so therefore we were partners in the deal. But I put it up and then charged my flat rate plus 50% split. It was a very, very small deal.
Well, good.
Oh, and I did it in the 401k. So
Yeah,
that's where
utilizing
most of my gap funders are. They're in their IRAs. That's the majority of mine.
yeah.
Yeah, I think that's where you'll find a lot of, and that's, if you are a developer, you want to get to know people that have money in their IRAs.
Absolutely.
Yes. Oh, Gene, they're in their infinite banking accounts as well. Infinite banking policies.
That's right. I needed to point out, if you missed the one of the webinars, and you should see it in the community page, in my community page of the expertise site, Harold explained about infinite banking. And so go back and take a look at that webinar. It basically allows you to borrow money from your life insurance policy to use for real estate. And anyway, it gets, when people say life insurance, my brain just sort of goes dead. So it's definitely worth going back and watching that webinar.
Well, yeah, especially when you're borrowing other people's money at 100% of other people's money, and you're able to borrow the 60 right here, and your actual money is getting a return plus a 20-30% return on the money you borrow, and you're only paying 5 or 6% for that money. So that's double, that's $1 doing the same thing twice.
Yep.
Twice. Well, it's a fascinating webinar. I highly recommend you guys look into that as well. So as a gap lender.
But what I was saying is it's a perfect opportunity for these gap lending scenarios.
Absolutely.
There's a lot of them. There's a lot of strategies behind gap lending, from whether you do a HELOC loan or whether you do an IRA or whether you do a life insurance, but so many different ways to go about doing gap lending as a lender.
Right. Absolutely.
I think early on, Leo made the comment of telling his neighbor to get a HELOC from their house at a low interest rate to invest in a gap. I was like,
yeah.
What?
Yeah. Get the HELOC under 4% and loan it out at 12. You got that arbitrage of 8.
That's true. It works. So you can see, if you can just keep reinvesting it, how the compounding effect will just, it's just incredible. And you're not really having to work at it. So let's see. Okay, there are some risks being a gap lender. There could be that you've invested in a poorly managed project. That is a risk. It happens. One of my favorite gap lenders said, Jean, I like the idea of a 50-50 profit split, but I want my 50% guaranteed up front because I've had developers that decide to go take a vacation instead of manage the project. They're not really, they don't have my money at their best interest. And so I can understand that. So I'm okay with that, with my gap lender doing that. That made sense. Unscrupulous developers. I'm sorry, but there are some people out there that are raising funds for projects that will either never get done or to make up for bad projects from before. You really need to vet out the people that you're going to be investing in.
Yep.
Just Google their name. You've got risks that increase penalties imposed by the first lender. And again, that gets down to the poorly managed project. Stuff happens. This is business. And, the first lender is sort of ahead of you, and they can do things like call the loan due. So you have to be, as a gap lender, you have to be prepared to protect your investment. So you don't just invest thinking, oh, good, we're going to get this great return. You have to be smart about your investments.
Mm-hmm.
So as a lender, you need to know how to analyze the deal. You need to make sure, as a lender, you want to make sure that your developer is going to have a profit. Again, in real estate, everybody's got to win. Everybody's got to make money. And, if you're saying, oh, I just want, X return, and that's just what I want, and I'm not flexible, well, you're not going to win. So you have to understand how the deal works and make sure that that the developer knows what they're doing. So, and you also have to really understand the paperwork that's required. Just like Leo pointed out, that if you do that promissory note that you're selling a security and you have to get a broker involved, I'd never heard of that before. So understand your local laws. I have heard of gap lenders actually having to foreclose on properties in order to protect their own interest. Because if the hard money lender forecloses on it, the chances of getting their money back, are slim. So you need to understand how these things are so important. And I am offering some classes on this. You'll see just on the right-hand side, we've got 2 classes, one on, if you want to search for gap funding, understanding how to structure the deal, make yourself appealing to the gap lenders, etc. So that class is coming up soon. You can just purchase that anytime. And then also, if you want to be a gap lender, how to vet the deal, how to know that you're making the right choice, how to understand what paperwork is required. So if you're interested in being a gap lender, I encourage you to do that as well. Now, if you are in my advocacy group, you'll get these classes as part of the advocacy program, which I offer, which is includes weekly calls and one-on-one conversations that are recorded for your use later. So let's see, I'm getting down to the questions.
I'm getting that one for Gail right now. I'm going to reply.
Yeah, the one that we were talking about, using your life insurance as a funding vehicle. I can't remember, what do we title that one? I can't remember.
Double your investment dollars with this one strategy.
That's right. Yeah. That's right. Yeah, it should be in the community page.
I just sent a link.
Okay.
To that question.
Okay. Okay. So there's only one company I know of that can help with the paperwork in the as far as a lender, and that's Anderson Advisors. Denise DeVoe is a friend of mine. She is the business development manager there. So if you need any help with the paperwork, they are there to help you. They are also really knowledgeable about trusts, and they're an attorney firm and an accounting firm. So I highly recommend that you reach out to them if you do go forward before engaging in one of these classes. Okay, so are there any questions or any again, if there's anything anybody wants to say, Harold, do you have any comments about the GAP subject?
Well, I think it's one of the best used strategies for real estate investors and real estate lenders. I would say also, like we said here, get your education on it. Jean, I believe you have a couple of books over here that kind of goes and dives into details about what to do and what not to do. And if you want to get started, go here, go there, something like that.
Absolutely. No, these are classes that I'm going to be holding. We're going to be looking at deals. One is from the investor's perspective, and one is from the developer's perspective. We go into how to establish trust. For the developers, how to establish trust amongst your investors, how to document your portfolio, how to analyze the deal, and how to present the deal so that you can be attracted to GAP lenders. The other one is for the GAP lenders to make sure that they are educated on how to vet the deal, how to make sure that it's a solid deal, and make sure that they are protected correctly and are armed with the tools that they may and hopefully never have to use should a project go south. Yes. So I encourage anybody to get involved with that. Of course, my advocacy program, I absolutely love. I've got a group where we talk about different subjects every week. You can also schedule one-on-one time with me. We talk about your deals, your projects, your issues, your frustrations, the how to get around this or how to leverage that. It's an open forum for us, and I am your advocate, and I would love to have anybody join me in those programs. And Leo, do you have any parting comments?
Well, the biggest question I always get asked, because everybody's always talking about gap funding in our world, is where you find them. It's always the number one question. How do I find that gap lender? And I say, my response is always, they're everywhere. I mean, literally, they are, whether they're your neighbor, whether they're a friend, a family relative, a colleague, I mean, at a meeting, a meetup group, I mean, they're everywhere. Because the majority of people that are in real estate investing, doesn't matter what they do, whether they buy and hold, whether they rehab, whether they're notes, whatever, they're associated with money in some aspect. And so from that standpoint, the question or the answer to the question becomes, well, just start talking about it and asking the question. Have you ever considered gap funding with your IRA or gap funding with your life insurance? Or you start talking about the strategy behind the need. So that's my input, is everybody should be looking everywhere for gap lenders.
That is absolutely correct.
Amen.
Yes, I tell everybody I'm a real estate investor. I just listen, and people, I mean, that's my hat. That is who I am. Yeah, I'm a mother of grown children. Yes, I'm a this or I'm a that.
Right.
I am a real estate investor, and everybody knows it.
Right.
And all I have to do is just say that, and that I have these projects, and I've got an investor that's getting pretty darn good returns on this opportunity that I'm working on right now. All that does is creates a question for them and an openness for them to come to me and say, I'd like to be involved in your next deal. And I just love that when that happens.
Yep. Get a lot of that.
Yeah.
And some of the questions, because people always are asking, where do you find them and what do you say? Well, one of the first questions I always start out with, are you happy with how your retirement account is performing for you today? And the majority of them are always, I don't know, or no, one of those two. And from that standpoint, then you can show, well, if I had the ability to show you an opportunity where you can earn 12% on your money, would you be interested in sitting down and talking? And so that is always a yes. So from the standpoint of how and where and what to say, it's got to be a conversation that you're comfortable with, knowledgeable about, and able to totally expose the opportunity.
Absolutely, and we get into that in the training class. Exactly, terms like that, how
Right.
to make yourself attractive to your neighbor, who you have no idea what kind of funds they might have hidden that could leverage your success and their return.
Right, exactly.
So I guess that's about it. Now I am offering this class. We are closing it on Saturday. So if you know of anybody that is interested in getting into this kind of investment practice, please tell them. Let's see. We do have a question. We have some money in 401k that we can move. We want to invest with other investors. That's great. We need to move it into a self-directed IRA first, but do not want to move it until we have a deal, as I do not want it sitting doing nothing. Yes, I have actually, the gap funding opportunities, you may know about them 3-4 weeks ahead of time. So that's been my experience. What about you guys?
Well, I would say put in the self-directed right now. She says, chicken or the egg. I would definitely go with planting the seed, which is putting in the self-directed now, because if it's going to take up to 30 days to set it up, I'd absolutely start right now.
Oh, absolutely. Because it's still, you deal with administrators and custodians and stuff like that. It's paperwork, and especially if you're dealing with retirement and all the new Department of Labor legislation that's just come down. I mean, it's just paperwork and slowness.
And trust me, the money won't just sit there.
No, if you've got some 401k money, there are plenty of places to go network with other real estate investors. If you're sitting on, Harold and I have a meetup, and Leo has his own meetup. Don't you have a meetup, Leo?
I have two.
Yes.
One on the third Saturday of the month and the fourth Wednesday of the month.
All right. So go to those real estate meetings, get to know people, learn how people think. And, like the one that Harold and I run, it's every week. And you can tell pretty quickly who are the serious real estate investors that know what they're doing and who are not. And it'll take 2 weeks, and you'll hear about opportunities, and it won't just sit there. It'll move pretty fast.
Three of the 4 investors that are on my current big East Austin fix and flip, 3 of the 4 investors are from our networking lunch.
Great.
So it works.
Okay, which SDIRA, self-directed IRA administrator do you recommend? Some have rather high fees, etc. I don't know if I can clearly make a recommendation. I know that in Austin that there's a fondness for Quest IRA. Find out what works in your local area.
You see my email down here. Just send me an email, and we'll get in touch, and we'll kind of visit that. I'll put that.
If it's a IRA service provider that's local, that's usually the best. For California, for San Diego in general, or Southern California, whether it's AccuPlan, UDirect, or IRA Services, all 3 are very good providers in Southern California and don't have high fees.
Good. That's good to know. Yeah, always check in your area. Go to your networking meetings. I think Harold and I are going to do a meetup or a webinar pretty soon on, if you don't have good meetings like what Leo has and what Harold has, there's ways to start them. Leo he's established in San Diego, and he's my go-to guy when I hear about a deal in San Diego, just because he makes himself available. He steps up to the plate and says, I'm here, this is what I'm doing. And Harold and I are doing the same thing here in Austin. So I highly recommend going to meetups, and don't be shy, don't be afraid. There are nice people in this real estate business. There's some vultures in here in this business too, but overall, the accomplished investors do like to help and share their knowledge. Mm-hmm. So I encourage everybody to go to meetups. Okay, so if we don't have any other questions, then I invite anybody that wants to talk to me personally to book some time with me. I would be delighted to talk to you. I've cleared my schedule for the next few days. So I encourage you to reach out to me. And if you've got any more questions, or you have a personal issue that needs some confidence and confidentiality, and just wanted to kind of just explore possibilities, reach out to me. We'll talk. And guys, thank you so much. I really appreciate you spending part of your day with me.
You're welcome.
All right. Thank you, Jean.
Yeah, thank you for doing this.
Oh, no problem. Thank you. And we'll talk to you soon.
All right.
See you later.
Bye-bye.